Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I am currently in Las Vegas attending the inaugural Market Rebellion Trading Conference. And as a guest speaker, I have to say it was one of the most exciting events I've ever attended, and we had a really good crowd. So I'd like to welcome those who are joining us for the very first time from that conference as we go and analyze the stocks one at a time. Now, I'm looking at the Qs. This is the Nasdaq market QQQ. And as I always do, I left my lines on the chart to show you how well the forecast panned out. Now remember, last week I drew this line right here telling you that the market will most likely drop at the beginning of the week, and then towards the end of the week we would most likely see a rally. And look at that, that's exactly what happened. In fact, on Wednesday we had a red candle followed by a bullish engulfing pattern that had a very long shadow underneath, telling us that the buyers were moving in with force. Now today, as I record this on Friday, October 4th, you can see that we gapped up slightly. There was some momentum on the opening of the market, and therefore we are now in buy mode at this particular point with resistance still at the 20-period moving average. Now, there's a lot going on in this one chart, so let me elaborate. Not only did we gap up, but you can see down at the bottom here, the stochastics oscillator and the CCI have both crossed with a buy signal. So what does that mean for next week? Well, the good news is I think the momentum will continue to the upside. I think there's a great possibility that we can go up and test resistance up here. I'm going to draw that horizontal flatline resistance. And while I think early on we will see a rally in the market, we cannot lose sight of the gap that's below the market. So I think early on we would rally and possibly pull back, almost the opposite of what we have seen this week. But we have to keep an eye on this gap fill support level, because that's exactly how it will serve us as a support level and a risk management point. So that's my forecast for the Qs. I'm going to hop right to the VIX, which is ticker symbol VIX, where I have staked my reputation on the fact that gaps will fill 100% of the time, and that's exactly what happened. My target for the VIX was this gap fill point. These are the lines that I drew. This was a 2-week forecast that I drew where I said the VIX would most likely rally to fill the gap, and then 80% of the time after a gap fills, it pulls back. Now the VIX did not gap lower. It traded lower with force, and today the stochastics are crossing with a sell signal, and yesterday the CCI has crossed with a sell signal. Now remember, the VIX is inversely related to the S&P, so I think the VIX will continue lower, which again, it's bullish short term for the S&P, with ultimately seeing a bounce right around support around the 20-period moving average right here. So keep an eye on the VIX. The gaps are filled. We'll have to wait for another gap to fill to create a trading opportunity for us. But remember, the VIX is a leading indicator that everyone, in my opinion, should have on their chart. So that's my forecast for the VIX. Now, following that is the SPY, the S&P 500. My line for the forecast is still in place. I said early on we would most likely drop to fill this gap. We did that, and in addition to that, we filled this very minor gap right here, which is now going to act as a support level. So now that the market is moving up, we can see that the next target will probably be in this area right here. Let me in fact clear that chart up and clean up the lines a little bit. I think that the S&P, like the Qs, will most likely rally up to the 20-period moving average. I'm going to leave it at that. We'll have to see whether or not the market starts losing some of that upward momentum as it approaches that moving average. But I do think we're going to see a rally up to the 20-period moving average. So that's my forecast. Keep an eye on that. Next week as we review this, that line will still be there. Now let's take a look at the diamonds, which is a Dow Jones Industrial Average ETF. Same scenario. I said we would most likely sell off early in the week, bottom out, and start to rally towards the end of the week. Look at that. Thursday, we had a hammer pattern that's very bullish. And like the Qs, we have a gap up So that could most likely fill. But I'm going to keep this line right in place. I think that the markets will rally up to the end of a target right there before pulling back. The stochastics have crossed with a buy signal. Today, the CCI has crossed with a buy signal, and that's when the line crosses the minus 100 line right there. The green horizontal line is when it crosses that, it's a buy signal. So I'm going with the buy signals. We will have to keep an eye on this support level because that gap fill point will act as a support. Remember, 80% of the time, gaps will fill, and then after they fill, they reverse. You can see that right here. In this gap fill point, the market started reverse after it filled. So I'm going to leave that just like that and then hop to a more broad-based index, which is the Russell 2000. I said we would sell off. The target price of support was broken, and the stock found a new level of support right down here. So we're going to use that as our risk management point. I'm going to delete this line because that is already taken place and the breakout below that. And I'm going to move this over. I'm just going to shift that over to the right. I think the Russell 2000 will also rally. I'm going to leave it just like that. And we have buy signals happening here on the stochastics, buy signal happening on the CCI. And it's going to be interesting to see whether or not we even rally up all the way to resistance, because as it stands now, the Russell 2000 index is caught in a sideways trading channel, which is music to the ears of every option trader because you can make money on the upside and the downside. And even for the swing traders, which are buying on support, selling at resistance. It's most frustrating for the investors who are in the long-term buy and hold mode, where they're just seeing sideways activity and a lot of stress added by the volatility. Now finally, during the conference, I had the opportunity of speaking with Kevin O'Leary. Some of you know him as Mr. Wonderful on Shark Tank. Well, it just so happens Kevin manages O-Shares, which is an ETF. Now let me talk a little bit about this because I asked his permission if it would be okay to talk about this and analyze it technically. While I'm not making any recommendations, I think it's a good addition to the weekly market report because their holdings, their top holdings include companies like Apple, Home Depot, Johnson & Johnson, Verizon, and I think that's a good cross-section of, I wouldn't call it a Dow component or Dow index of any sort like that, but if you look at the long-term trend on this one, it's very interesting to see that it's in a most definitely defined upward trend. And you can see here that if I draw a longer term 3-year trend, you can see that by drawing a fan line right here, connecting these lows, you can see that the trend is starting to accelerate. Now on this weekly chart, and this is what I want to point out to everyone, you can see that the momentum indicators are shifting lower on the weekly, but I want you to focus your attention on this one candle, which is a very powerful hammer pattern. That is a bullish indication. This is one of the instances where you're paying more attention to the price action than you are to the oscillators. I think this one has the opportunity to break out right there of resistance and possibly take a run higher. So I will be adding this to the weekly market report. I'll be tracking it. Look into it. I would say look at prospectus, tear it apart, look at the holdings, because for the option traders there's going to be some interesting plays here as well. While this stock does not have liquidity on the options themselves, the underlying components do have a lot of liquidity, and there's lots of spreads that you can put on that I'll be introducing over time. So that's my weekly market report. Again, I want to thank everyone who's attending the conference here in Vegas. I look forward to continued reports to you and with you, and hopefully you're getting the value add out of these each and every week. So enjoy the weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.